Winter is here for financial markets. Not only did they close lower for this week, they all entered correction territory. Gains for the year have been wiped out. Okay, needless to say, I did feel this kind of burn. My portfolio's down. I'm sure some of you guys are down. Financial news is calling this month Red October. So let's just look underneath the hood and see what's wrong. Fundamentally, the US economy is strong compared to its global peers. GDP number for Friday was good. It was 3.5. People expected 3.4%. So that was good. However, we are seeing economists, they are lowering their forecast for next quarter to 3%. That's because of weaker business spending, and also an increase in the trade deficit. Main components for GDP usually include government spending and export, as well as consumer spending. So that's just something to look forward to next quarter. We're expecting slowdown in GDP numbers right there. Companies reported earnings. They got off to a good start, earnings season. However, as the weeks went by, we see more and more companies, they talk about the rising cost of material, of labor, and these start to eat into profits, especially for Caterpillar and most industrial companies. We see that tariffs are becoming a significant cost for companies that deal business internationally. Amazon lowered expectations for sales next earnings seasons, which usually holiday spending accounts for a large portion of their revenue. They missed their revenue but still exceeded profits for Thursday. Technically, market has more room to run on the downside. It is in a short-term to intermediate-term downward trend. We're not quite there in the bear yet, guys, but we're going there. I would not be surprised if it turns into a bear again. It has a lot of room to run, but I'm ready to be wrong. Technically, looking at all the indicators, S&P below 200 moving day average, US small stocks are down. If you know Dow theory, Dow Transport and the Dow are declined. They broke their trend lines. The advanced decline line, which is just a ratio of how many companies have a price increase over how many companies suffer a price decrease in that particular index. The lower that ratio goes, the more companies' stocks are going down. So I conclude the US market is definitely in the red. Winter is here. But again, some people freeze in winter while others enjoy a cup of hot chocolate in their room. Most corrections do not turn into bear markets. We have to look at fundamental signs. The major ones are the midterm elections. They are coming, I think it's next week. Should be next week. And we are also looking forward to President Trump and President Xi Jinping possibly having negotiations during the G20 summit on their trade policies. Okay, now for what traders or investors should do. Traders, if you have not already, you would have sold your positions or are going into short positions or defensive positions. Investors have a few more options. You can do nothing, like what I'm doing right now. I'm not touching my portfolio. I'm just gonna let it run while I convert some of my bond positions to buy more stocks, probably in the next few months if this keeps on going. Or you can rebalance your portfolios or continue with dollar cost averaging and diversifying. That's just a fancy term to say add more money into your stock account. So that is it for this week. I know I use a lot of big words in this video, and if you need more clarification, feel free to reach out to me. Again, this video is just a follow-up for my most recent blog post, which you can find on my blog. I think I shared the link somewhere on Facebook. So, alright guys, have a good week. Enjoy winter.